China has finally decided to make the move to stimulate their economy. And the effects of these decisions are already being felt across the stock market, as one stock in particular has gone up over 17% in the last 5 trading days, and that is Alibaba. So in today's video, we are going to discuss what China has decided to do around their economy, as well as the long-term effects that this could have on businesses like Alibaba. As I mentioned, Alibaba's stock price is already feeling the effects of these moves from the government. The stock alone in the last 5 days is up over 17%, and in the last month, it's up 28.5%. So far year to date, Alibaba has ran up over 40%. However, over the last 5 years, it's down over 35%, and from the all-time highs achieved back in 2020, the stock is still down over 65%. The most recent moves in Alibaba's stock price comes from the fact that China's central bank announced that they are going to be shifting their policy in an attempt to further stimulate the economy. And if you aren't familiar with the Chinese economy and what has gone on in the last couple of years, here is a quick breakdown. Up until around 2023, the Chinese government elected to shut down certain cities that saw increases in pandemic cases. And this led to a lot of issues because a number of other countries had moved out of this phase. However, China was still going through this. They were still locking down cities, and this is causing a very start and stop effect within the economy that especially affects people's income, and thus not having money to spend out in the economy and really keep the momentum going throughout the country. However, more recently, they have had increased problems around their housing sector. This has been the biggest concern for a lot of investors in China because the housing crisis has been compared to 2008 in the US. And this is one of the big concerns that the Chinese government is going after through these stimulus. They announced that they are going to be cutting the amount of cash that banks need to have on hand by 0.5 basis point. What this ultimately means is that if banks were previously required to hold 10% of their cash on hand, now they are only required to hold 9.5% of their cash on hand. This additional margin is basically money that those banks can now lend out to consumers. The thought behind this is now there will be more lending out to consumers as well as businesses and help kind of stimulate the economy, especially the housing market within China. And there's even discussion that the Chinese government could look to reduce this rate even further by the end of the year, anywhere from a 0.25 to a 0.5 basis point reduction. And with everything going on with China's economy, they have been very slow to react. Back in 2020, their loan prime rate was sitting at 4.15%. And here today, they have dropped it by less than 1% to 3.35%. And there's definitely a good and a bad side to this. On the one hand, there's definitely room still to drop interest rates further, and they've also done a very good job of avoiding inflation. But on the other hand, the economy has suffered and they're actually at risk of experiencing deflation. So overall, this appears to be a very good thing for the Chinese economy. It frees up around $142 billion of short-term liquidity. There's also interest payment reductions, which should equate to around $21.3 billion annually for over 50 million households. And on top of all of this, there is a stock market stabilization program that's supposed to equate to around $71 billion. But really, for the long-term growth of an economy, you need two things. You need consumer confidence in the businesses within the country to thrive. And that's where Alibaba comes in. In the last few years, businesses within China have not been thriving. When you look at Alibaba and think about the interactions that they have had with the Chinese government in the last 3 or so years, they have all been very negative. The Chinese government went after a lot of these large tech companies within the country and actually fined them on antitrust regulations. Alibaba alone suffered a fine of $2.6 billion. And this has a huge effect on businesses because when they are paying this much money in fines, it not only affects the metrics behind the company, it also affects how much money they can invest into new technology, hiring new employees, as well as increasing wages of their existing employees. But with this changing in policy, we should start to see the opposite come through. Alibaba's revenue has been basically flat over the last 2 years. However, as stimulus comes into the country, especially affecting lower and middle classes within the country, we should start seeing spending go up and companies like Alibaba seeing their top line grow at a much faster rate. Over the last couple of years, they have seen single-digit revenue increases year over year, and even earlier than than that, they were seeing their revenue decrease by mid-single digits. And this should also have a big impact on the profitability of these businesses. Alibaba in the last couple of years has had some inconsistencies around its profit, even showing a couple of quarters of negative EPS. More recently, they've stabilized a little bit. However, they're still down significantly from the highs that we saw of trailing 12-month EPS in 2020 and 2021. And Alibaba specifically is even more well positioned to capitalize on these increases than a lot of other companies because of the amount of buybacks that they've done in the last few years. We can see that most recently, they put up a decrease year over year of about 5% of their outstanding shares. Another big benefit for Alibaba is their cloud business. China is known to lag behind the US in terms of adoption of new technology. So we have seen companies like Google, Microsoft, and Amazon and their cloud businesses explode in the last few years. However, Alibaba, again, being a Chinese company, tends to lag behind these other businesses. So with this stimulus coming through, we could actually see a lot more companies within China adopt Alibaba Cloud and that business. And these effects could be compounded further by the fact that now that the Chinese government is reducing some of these interest rates, businesses across the country should be able to invest further into their companies and look at technologies like cloud, like AI, to further advance their companies. And if that wasn't enough, the fact that the US is cutting their interest rates should also actually have a big effect on Alibaba's stock price. Because if you think about it, the fact that China is lowering their interest rates and trying to stimulate the economy, that should have a big effect on the metrics behind the business in terms of Alibaba and where they're headed in the future. But if you think about the fact that the US is now cutting their interest rates, this means that there's likely more money coming into the stock market, which should drive up valuations. And right now, Alibaba is sitting at a forward P ratio of 11.11. When we compare that to the broader market, the S&P 500 index has a current forward P ratio of 23.05. That is over double where Alibaba is currently sitting at. And the NASDAQ 100 currently has a forward P ratio of 29.17, almost triple where Alibaba's at. And that appears to be what's going on in the market right now. A lot of this money that's been sitting on the sidelines in savings accounts is coming into the market and looking for companies that are trading at a discount. Obviously, there's still some money going into the Magnificent Seven. However, a lot of people are going to be looking for a little bit more risk to add to their portfolio since we're seeing interest rates fall. And I've thought for a long time that the Chinese government would come through and provide stimulus to the economy. I honestly thought that it would happen a lot sooner than this. However, now that it's happening, I think that it's going to evolve into something bigger. I do think that they're taking their time with this still. I think they could drop interest rates even lower if they wanted to, but they're still worried a little bit about inflation. But right now, I have 15 shares of Alibaba in this portfolio. It's up almost 40%. I have a much larger position in my other portfolio, but this portfolio is kind of my YouTube portfolio. It's got some smaller positions in it. Within this, I have Alibaba, Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. Right now, Visa is pretty close to its cost basis. Might be looking to add a little bit more to that position, but Alibaba right now, I'm kind of comfortable with where I'm at in terms of my cost basis, and I'll probably let this one run, especially again because I have a much larger position in my other portfolio. But as I always say, don't buy a company just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what do you call a herd of sheep falling down a hill? Check the comments down below for the answer. Thanks for watching.